Good morning, everyone. So just settle down, everyone. So our today's topic is provision for filing, return of income, and self-assessment. You already learned that. See, the due date is here. You have to file your return before the due date, etc., etc. Now, what are the due dates? What are the due dates who are required to file return of income, etc.? We will cover here. Okay. So here we will learn whether is it compulsory to link your Aadhaar with your PAN or not. Under which section you have to file your return of income. What is the due date for filing return of income? That we will discuss. What is the types of return of income? That is normal return, return of loss, related return, revised return, updated return, defective return, etc. So let us discuss one by one. So what return of income contains? Return of income contains the full information of assessee, that is how much income he earned and on that income under which head the income is categorized and the rate of tax is applicable to different type of income and the total amount of tax paid by the assessee. This all the details we have to report in our return of income. Okay. Sorry. Who are required to compulsorily file return of income. As per section 139 subsection 1, it is compulsory for companies and firms include LLP as well, to file a return of income or loss for every previous year on or before due date in prescribed form. See, for the company, the prescribed form is ITR 6. For firm, the prescribed form is ITR 4 or 5. Okay. So for companies and firm, they have to file your return of income even if they incurred loss during the previous year before due date. What is the due date? That we will discuss later. In case of person other than company or firm, now it is compulsory for company and firm to file return of income. Now for the person other than company or firm, say for example individual, HUFs, right? So they have to file a return of income if his total income or the total income of any other person in respect of which he is assessable, that is clubbing. Right? You have learned that someone's income you are required to pay tax under the clubbing. That is section 60 to 64. During the previous year exceeds basic exemption limit. So as an individual, if your income for individual, the basic exemption limit is 2,50,000. Right? For senior citizen, the basic exemption limit is 3 lakh. For super senior citizen, the exemption limit is 5 lakh. Okay. So if your income exceeds basic exemption limit, but this income should be before deduction under chapter 6A and before exemptions under capital gain chapter, that is 54, 54EC, 54F, etc. Okay, so suppose someone says that Mr. X gross income is 2,60,000 and he deposited 50,000 to PPF account. Less deduction under chapter 6A, that is 50. Now his income is 2,10,000. Whether he is required to file return of income compulsorily? Yes. Why? Because before deduction, that is your taxable income is more than your total income before deduction. Your total income before deduction is more than 2,50,000. So Mr. X is required to file his return of income compulsorily under section 139 subsection 1. Now, every person being other than not ordinarily resident in India, that is non-resident and resident but ordinarily resident in India, who is not required to furnish return under 139(1). Say, for example, they have gross income less than 2,50,000, so they are not required to file return of income under 139(1). But they have to file their return of income if the following conditions are satisfied. So point 1 says that hold a beneficial owner or otherwise any asset, including financial interest in any entity located outside India, or has a signing authority in any account located outside India. Say, for example, I am resident and ordinarily resident in India. My income is 2,10,000 before deduction. So under section 139 subsection 1, I am not required to file my return of income. But say, for example, I am having a house property in USA. I am having a house property in USA. So I am holding the asset in which is located outside India. So in that case, even if my income is less than 2,50,000, I have to file my return of income. Or is a beneficiary of any asset located outside India. Yes, Dhyanesh, see, what you have to see is irrespective of your tax liability, even if your net income is less than 5 lakh, then you are eligible to claim rebate and there is a no tax liability. Even if that was the case, you have to file your return of income. For compulsory filing return of income, you have to check only one thing, that is if my income before deduction or exemption under section 54 to 54G is more than 2,50,000. If yes, then I have to file my return of income compulsory. If I am beneficiary of any asset located outside India, then also I have to file my return of income. But in that case, if the holder of asset, see, there is two terms, that is beneficial owner and beneficiary. Beneficial owner का मतलब क्या है? The person who has provided the consideration for purchase of asset. For purchase of asset. And beneficiary means a person who derives the benefit from the asset. It is possible that both are different. Say, for example, Mr. X purchased a house property, and for that, Mr. X is giving the consideration. Okay, but the beneficial owner is his son. So in that case, the rental income generated from the house property is received by his son. So his son is called as beneficiary, and the Mr. X is called as beneficial owner. So in that case, my dear friend, if beneficial owner has already reported in his total in his income that he is holding foreign asset, then in that case, beneficiary is not required to file return of income. Okay. So the summary is given here. Further, every person, being an individual or HUF, AOP or BOI, whether incorporated or not, or an artificial judicial person, whose total income or total income of any other person, which is includable in their income, without giving effect to provision of chapter 6A, yani deduction, or section 54 to 54F, exceeds the basic exemption limit. I have already explained this. If you are an individual, if you are having an HUF and their income is more than basic exemption limit before giving effect to deduction under chapter 6A or section 54 to 54F, then in that case, they are compulsorily filed. They have to file their return of income within due date. Here the basic exemption limit is given, that is 2,50,000 for individual, AOP, HUF, BOI, 3 lakh for senior citizen, 5 lakh for super senior citizen. Okay. Generally, the basic exemption limit is after deduction of deductions available under Chapter 6A and exemption under Section 54 to 54A. But for determining whether they are required to file their return of income or not, you have to check this limit before giving effect to Chapter 6A or exemption under Section 54 to 54A. Everyone clear up till now? Yes or no? Everyone clear up till now? Yes or no? So next is any person other than company or firm, yani individual, HUF, AOP, BOI, etc. If they are not required to file their return of income because their income is less than 2,50,000 or 3 lakh or 5 lakh respectively. But if they fall in following criteria, that is, if they are fulfilling any condition of A to D, then they have to file their return of income compulsorily. First, what you have to check? You have to check whether their income is 2 lakh more than 2,50,000. If yes, they have to file return of income. Baki, you don't have to check any other condition. Okay. So you don't have to check any other condition. But suppose the income is less than 2,50,000, that is before giving effect to Chapter 6A and exemption, then you have to check the other conditions. Otherwise, first you have to check only that if the income is more than 2,50,000, they have to file their return of income within due date compulsory. Next is, if the conditions above is not satisfied, then you have to check the other conditions. That is, such person has deposited an amount or aggregate of amount exceeding 1 crore in one or more current account, maintained with a banking company or cooperative bank. See, if your income is less than 2,50,000 and you are not holding any foreign asset, then in that case, whether you have deposited rupees 1 crore or more in your current account, if yes, then you have to file your return of income. If has incurred expenditure of an amount or aggregate of amount exceeding 2 lakh for himself or any other person for travel to foreign country. So if you are purchasing a foreign tour package worth rupees more than 2 lakh, then in that case you have to compulsorily file your return of income. Now you may arise a question that how they would know that we have incurred in foreign expenditure of more than 2 lakh. So in TDS chapter, we have discussed this on tour package, on foreign tour package. The tour operator will collect TCS. So the amount of TCS will reflected in your 26 AS, and based on that, the government will came to know that you have purchased a foreign tour package. Has incurred expenditure of an amount or aggregate of amount exceeding 1 lakh towards consumption of electricity. If you are paying electricity bill more than 1 lakh rupees, then you have to file your return of income if the above conditions are not fulfilled or fulfill such other prescribed condition. So the other condition prescribed is given here. It is the latest notification given by the CBDT on 21st April 2022. That is, if you are not required to file return of income due to any above reasons, right, then you have to file your return of income before due date if your total sales, turnover, gross receipt, as the case may be, in the business is greater than 60 lakh during the previous year. Is greater than 60 lakh during the previous year. So say for example, my turnover is more than 60 lakh, then I have to file my return of income even if even if my profit is 1 lakh rupees. If his total gross receipt in profession is greater than 10 lakh during the previous year. If your gross receipt from profession is more than 10 lakh, then you have to file your return of income compulsory, even if your profit from profession is, say, for example, 2 lakh rupees, and you does not have any other income. If the aggregate of TDS or TCS during the previous year, in case of person, is 25,000 or more, yani if the TDS deducted or TCS collected from your account is more than 25,000 during the previous year, then you have to file your return of income. And in case of senior citizen, this limit of 25,000 is come to 50,000. So in case of senior citizen, if during the previous year, total TDS and TCS deducted or collected from source is more than 50,000, then you have to file your return of income. Or if a person deposit in one or more saving bank account in aggregate 50 lakh or more during the previous year. If you are depositing more than 50 lakh in your saving account, above it was current account, here it is saving account of rupees 50 lakh or more during the previous year, then you have to file your return of income before due date. Okay. So the criteria is if your income is more than 2 lakh, see, company and firm is required to file the return of income compulsory. Other than company and firm, if the income is more than basic exemption limit, the basic exemption limit is before giving exemption under section 54 to 54F and deduction under chapter 6A, then they are required to file return of income compulsorily. If any person hold beneficiary or beneficial owner of any foreign asset, then they have to file return of income compulsory. Other condition is electricity bill more than 1 lakh, foreign to more than 2 lakh, deposit in current account more than 1 crore, or such other condition. The other condition is in business, if the turnover is more than 60 lakh, in profession, if the professional is more than 10 lakh, and if the TDS and TCS is more than 25,000, in case of senior citizen, it is 50,000, and deposit in saving account is more than 50 lakh. Then you have to file return of income before due date. Now, what is the due dates? So, meaning of due date means 31st October of assessment year, yani for previous year, 20 to 23, 31st October of assessment year, that is 31st October 2023, where the assessee, other than assessee report to in to below, yani to below. If the assessee is a company, if the assessee is a company, or if the assessee is person other than company whose accounts are required to be audited under Income Tax Act or any other law for the time being in force. Say for example, you have you are partner in a partnership firm and your partnership firm's books of account are required to be audited. Then the due date for filing return of income for partnership firm is 31st October. Why? Because the partnership firm is required to file their return of income within the partnership firms is required to get their books of account audited under Income Tax Act. Okay, so for company and whose accounts are required to be audited are required to file return of income before 31st October. Yes, this is a tax audit. Say for example, I am an individual. My books of account is required to be audited under Income Tax Act. Then the due date for filing return of income in my case is 31st October. Clear everyone? A partner of firm whose accounts are required to be audited under Income Tax Act or any other law for the time being includes. If the partnership firm is required to get audited their books of account, its books of account under Income Tax Act, then the due date for filing return of income for that partner is also 31st October. Why? Even if the partners is an individual. Why? Because at the time of audit, the profit of the firm is fixed, finalized. Okay. So after finalization of a firm, partner will came to know that how much profit, how much share of profit he will get from the firm. As a partner, you have to report in your return of income the share of profit from the partnership firm. That's why the due date for partner of firm whose accounts are required to be audited under Income Tax Act or any other law, then the due date for partner is also 31st October. 30th November of assessment year in case of any assessee, including partner of firm, being such assessee who is required to furnish report under section 92E. See, in your case, 92E is not covered. You will learn 92E in final. But I'll explain you if you are having any international transaction with your foreign subsidiary or associate concern, then you have to submit report of chartered accountant under section 92E. So if you are doing such transaction, then the due date for filing return of income in your case is 30th November of assessment. And in any other case, it is 31st July of assessment year. So say for example, if a person is a salaried employee, then the due date for that individual is 31st July of assessment year. If a partnership firm is not required to get their books of account audited, then the due date for partnership firm is also 31st July. And in that case, the due date for filing return of income of partner is also 31st July. Is that clear, everyone? Sure, let us discuss the illustration number 1. Paras, aged 55 years, is a resident of India. During financial year 22-23, interest of 2,88,000 was credited to his non-resident external account with SBI, rupees 30,000. Sorry, 2,80,000. 30,000 being interest on fixed deposit with SBI was credited to his saving bank account. Is Paras required to file return of income? Yes or no? First question. So in this case, whatever interest you will receive in your non-resident external account, that is NRE account, is exempt from tax. Is exempt from tax if RBI permitted to you to maintain the account, NRE account. So here we assume that the Paras have a permission of RBI that he can maintain the NRE account. So in this case, the interest from NRE account is exempt. Right? So exempt income is not part of your total income. It is they are questioning that not as per the Companies Act, as per the Income Tax Act. As per the Companies Act, you cannot audit your books of account after 30th September. You have to do it before 30th September. Otherwise, there is a heavy penalty under Companies Act. Now, and you can audit your books of account late or you can file your return of income late. That we will discuss. But for that, there is a penalty, state penalty of 1,50,000 if you get your books of account audited after the due dates. And other penalties under Companies Act is also there. Now here we assume that the NRE, the interest from NRE account is exempt. Okay. So now the exempt income is not part of your total income. So in that case, what is your taxable income? Your taxable income is saving interest from SBI, that is 30,000. Sorry, fixed deposit interest from SBI, 30,000, and saving interest 3,000. So my income before claiming reduction under Chapter 6A, here the deduction under Section 80TTA, that is 3,000 from saving interest is available. But before claiming deduction under Chapter 6A is less than 2,50,000. Is less than 2,50,000. So Mr. Paras is not required to file return of income within due date, compulsorily. Now suppose if you assume that the interest from NRE account is taxable, then in that case, yes, Mr. Paras has to file his return of income within due date, because his income before claiming deduction under Chapter 6A and exemption from Section 54 to 54F is more than 2,50,000. What will be your answer if he has incurred 3 lakh as travel expenditure of self and spouse to US to stay with his married daughter for some time? Now here his foreign expenditure is more than 2 lakh. His foreign expenditure is more than 2 lakh. So he has to file return of income. In second case, he is required to file return of income compulsorily under Section 139 subsection 1. Clear everyone? Yes or no? Under Section 10 subsection 4 clause 2 of Income Tax Act, it is written that if RBI permit, then NRE account interest is exempt. Generally, non-resident is permitted to maintain NRE account. Up till now, everyone clear? Yes or no? Up till now, everyone clear? Chalo, next. Interest for default in furnishing return of income under Section 234A. If you are filing your return of income within due date, then interest under Section 234A is not applicable. When interest under Section 234A is applicable, in case where you have not filed your return of income within due date. Say for example, my due date is 31st July of assessment year, and I am filing my return of income on 30th September of assessment year. So the due date is 31st July, but I am filing return of income on 30th September. So in that case, August and September, I have to pay interest for 2 months. I have to pay interest for 2 months. That is simple interest, 1% per month or part of the month. 1% per month or part of the month. I have to pay from the period commencing from the date immediately following the due date. That is from 1st August to 30th September. Because I have filed my return of income on 30th September and the due date is 31st July. So after due days, you have to pay interest under Section 234A at the rate of 1% per month. So in this case, I have to pay 1% interest for 2 months. Now the interest is required to pay on the income tax payable amount. Say for example, my income tax liability is 1 lakh, but I have already deposited 50,000 advance tax. My TDS is already deducted 30,000. So the balance 20,000 I have to pay as self-assessment. But that 20,000 I have not paid till date. I have paid that 20,000 on 30th September. Then on that 20,000, I have to pay 1% interest for 2 months. That is August and September. For the period commencing from the date immediately following the due date and ending on the following date, that is where return is furnished after due date. आपने return file कर दिया after due date, then up to the date of furnishing the return, and if where the return is not furnished, आपने return file नहीं किया, then in that case the date of completion of assessment. Whenever the income tax complete the assessment, then in that case from the end of due date to the date of completion of assessment, you have to pay interest under 234A. Here it is given that on which amount you have to pay interest under 234A. So the amount payable at the time of filing return of income, and you have not paid that amount before the due date. Say for example, if you have already paid tax before due date, but you have not filed return of income before due date, then whatever amount you have paid before due date, whatever amount of tax you have paid before due date, on that amount of tax, you are not required to pay interest under 234A. Say for example, my income tax liability is 1 lakh rupees. I have paid advance tax of 50. The TDS is 30. And say for example, 10,000 I have deposited on 30th June as self-assessment. Now the balance 10,000 I have not paid up to the date of filing return of income. This 10,000 I will pay on 30th September. Then in that case, on this 10,000, I have to pay 1% interest for. Okay. So whatever amount you paid before due date of filing return of income, then on that income, the interest under 234A will not apply. Two 234A will also apply if the tax is required to be paid under 140B. The 140B is in detail is given in this chapter only, but in later part, at that time, we will discuss again the 234A's implications on section 50 on 140B. Okay. Next is P for default in furnishing return of income. If you have not furnished your return of income within due date, that is up to 31st July or 31st October or 30th November, whatever due date is applicable to you, and you file your return after the due date, then you have to pay late filing fees. Interest is there. Late filing fee is separately. Late filing fee is straightway because of default in furnishing return of income. So in case of default in furnishing return of income within due date, you have to pay late filing fees and interest on tax payable amount under section 234A as well. So the late filing fees is 5,000 rupees straightway. 5,000 rupees straightway. But if your income does not exceed 5 lakh, if your taxable income, that is after deduction and everything, does not exceed 5 lakh, then the fee shall be 1,000. Then in that case, say for example, that is if total income is up to 5 lakh. See, if your income is up to 5 lakh, you are eligible for rebate under section 87A. But in that case also, you have to pay late filing fees because you are not filing your return of income within due date. Then the late filing fee is 1,000. If your income is greater than 5 lakh, then late filing fee is straightway 5,000. Clear, everyone? Up till now, clear? If you have already paid all the liabilities before due date, then interest is not applicable because you have already paid your tax liability. But yes, late filing fees is there. So if in our case I have deposited whole 20,000 before due date, then there is no interest. But yes, late filing fees is there. Specified class or class of person to be exempt from filing return of income. So generally, every person who fulfill the condition given under 139(1) is required to file return of income within due date. But government have power to notify certain class or class of person if they fulfill such conditions that given by the central government, then they are not required to file return of income. For this, the example is those senior citizens, specified senior citizen, aged more than 75 years. We have learned the section 194B, whose TDS is deducted under section 194B. They are not required to file return of income. Right? Yes, 5 lakh पे zero tax होता है because of rebate. But if in 5 lakh there is a capital gain, then the rebate is not available. On long-term capital gain, the rebate is not available. But even if there is no tax liability, if you are filing your return of income after due date, you have to pay late filing fees. That is the golden rule. Even if your tax liability is zero, the tax liability and late filing fee is different. You are filing the return late. That's why you have to pay late filing fees. That's it. Clear, Mr. Kumar? Return of loss. Even if you have loss, then also you have to file your return of income within due date. In chapter set off and carry forward of losses, you already discussed that if you want to carry forward your losses, if Manisha, under 139(1)(c), government have power that they will notify certain class of person that are not required to file return of income within due date if they satisfy the condition prescribed by the government. So the best example is in case of senior citizen aged 75 years or more. 75 years or more, if their TDS is deducted under section 194B, then they are not required to file return of income. I am just giving you the example of 139(1) that the government can notify anyone. कल को budget में आगे government will say that if your income is 5 lakh, you are not required to file return of income. Then don't file. So for carry forward of losses, you have to file return of income within due date. So in case of loss also, you have to file your return of income within due date provided under 139 subsection 1. If you have not filed return of income within due date, then in that case, you are not allowed to carry forward your losses. Then you are not allowed to carry forward your losses. So that you have already studied in the set of chapter. No, yes, if they have TDS grade, then for refund claim, say for example, my income is 2,10,000 only, but there is a TDS deducted of rupees 15,000. So I have to I have to claim refund from the government of that 15,000 because 15,000 is already deposited on my behalf to the government. But my tax liability is zero. So in that case, I have to file my return of income to claim the TDS credit, that is tax deducted. That if you want to claim refund, then you have to file return of income. That is given later. And again, that is not an issue. If you are not filing your return of income, your credit will go on. You cannot claim refund. Simple. So even if you have losses, the return of loss You have to file, because if the return is not filed within due date, then the carry forward of losses is not permissible. But yes, there are two losses which is carry forward even if the return is late filed. That is, return is filed after due date. So only two loss, that is the loss under the head income from house property and unabsorbed depreciation. You can carry forward this two loss even if you have not filed return of income within due date. But for other losses, that is for business loss, speculation business loss, loss under the head capital gain, any loss other than house property and unabsorbed depreciation, for carry forward of losses, you have to file your return of income within due date. And you cannot say that the assessing officer has not given a notice to the assessee that you have to file your return of income. Okay, it is not an excuse. You have to file your return of income, even if you have losses. Belated return. Belated return means late return. That the return is filed after due date. See, the government has to restrict some date for late filing also. Otherwise, 5 साल पहले का return someone filed today. Okay. So you can file your return of income after due date. After due date. But any person who has not furnished a return within the time allowed under 139(1), that is before due date, may furnish return for any previous year at any time before 3 months prior to end of relevant assessment year. That is, in case of previous year 22-23, the assessment year is 23-24. So 3 months before the end of assessment year, that is 31st December 23. So in case, see, again, there is 4 days left for late filing of return. So if any member of your family has not filed their return of income till date, they have a chance to file their return of income up to 31st December. So if a person has not filed return within due date, then he can file late return up to 3 months before the end of relevant assessment year, or before completion of assessment. If before that government, before 3 months, if assessing officer will give you notice to file your return of income, then that you have to file return that time, whichever is early. Whichever is early. So you can file late return, but up to 3 months before the end of assessment, relevant assessment year, or before completion of assessment, whichever is early. Again, you can file a revised return. Revised return means what? I have already filed my return of income within due date or after due date. That is, even if I have filed the return, belated return, okay, that is after due date. And after filing return of income, I realized that certain mistake was there in my return. Certain mistake was there in my return. Then in that case, I can revise my return. Say, for example, certain income I forgot to take in my return. Then I can take that, okay, and I can file revised return. For filing revised return, again the date is same. You can file revised return even if you file original return is filed within due date or after due date. You can file your revised return at any time. Again, before 3 months prior to end of relevant assessment year, that is for if you are filing return for previous year 20-23, then you can revise your return up to 31st December 23 or before completion of assessment year, whichever is earlier. Yes, late filing fees is always there. But in case of loss, if you are filing return after due date, you are not eligible to carry forward that loss and not eligible to set off that loss in future years. So my advice is to, if you have lost, then you should file your return within due date. Yes, not up to 3 months. Before 3 months from the end of assessment. Prior to end of assessment year. Not 3 months from the end of. Assessment year end होते हैं उसके पहले के 3 month तक you can file your return. And yes, see my dear friend, if you are filing late return, you have to pay interest, you have to pay late filing fees. They provide you the dates for late filing of return. If they have not restricted the filing of return, late filing of return, then anyone can file the return. Say, for example, I will file my return of assessment year 16-17 today. Okay. So they have to restrict ना कि आप इतनी डेट तक you can file your late return. Otherwise, it is difficult. Someone will file 2003-4's return today. It is not possible. That's why they have given that if you miss the due date, also you can file a return of income, but before 3 months prior to end of relevant assessment year. After this date, yani for in current year, after 31st December 22, that is for assessment year 22-23, no one is able to file return of income. There is an updated return. We will discuss the concept of updated return, but in updated return, although there is a separate concept and there is we have to pay additional taxes and etc. No, late fee is not attracted in case of revised return, because in case of revised return, it is deemed that your return, the filing date is the date on which the original return is filed. In case of revised return, there is no additional fee. Say, for example, I have filed my revised return on 25th July, that is before due date. So after that, I will file my revised return and the late filing fee is not attracted. In case of revised return, the date of filing is deemed to be the date on which the original return is filed. Clear everyone up till now? The summary is given here. Up till now clear? So we will discuss illustration 2. Please reply. Everyone clear up till now? Chalo, illustration 2. Explain with brief reason whether the return of income can be revised under 139 subsection 5 of Income Tax Act in the following cases. Belated return filed under section 139 subsection 4. Yes. As I have already discussed that you can file a revised return for whatever mistake you will recognize in your return, you can file revised return even if the first return, that is the original return, is not filed within due date. Even if the original return is belated return, then also you can revise return, but yes, up to due date. Return already revised under section 139 5. एक बार आपने return revise कर दिया. So can you revise that return again? Yes. Yes. In the act, the date is given. That is on which date you can revise your return. Okay, there is not given, they have not provided that you can revise your return only once. You can revise your return more than once. You can revise your return for n number of time, but but before prior to end of but before 3 months prior to end of relevant assessment year or completion of assessment, whichever is earlier, you can revise your return more than once, but within prescribed time. Return of loss filed under section 139 subsection 3. Yes, also. Return of loss is deemed to be filed under section 139(1). So you can revise the return of loss also. See, they have given that if related return, see, my dear friend Dhyanesh, you are confused. See, if you are filing return after due date, then you have to pay interest on tax payable from the end of actual due date, that is 31st July, to the date on which return is filed. And if return is not filed, then in that case to the due date on which the assessment is completed. Okay, Yanesh, clear now? Sri Lakshmi, you cannot file return for assessment year 2021 now. In that case, you may file the updated return. In that case, you are filing the updated return. An updated return is pending. We will discuss the concept of updated return later. Now, what are the particulars you are required to file along with your return of income? So, the prescribed form of the return shall in certain specified cases require the assessee to furnish the particular of income exempt from tax. See, on exempt income, there is no tax liability, but you have to report that this exempt income I have earned during the year. So detail of exempt income, say for example, interest on public provident fund account, it is exempt. Okay, so you have to provide the details of how much interest you have earned from which sources. You have to given that details under the return. Asset of the prescribed nature and value held by him as beneficial owner or otherwise, or in which he is a beneficiary. If your income, in this case, I am giving you an example. If your income is more than 50 lakh rupees, taxable income, net income. Okay, if your income is more than 50 lakh rupees, then you have to give all the details of your assets and liability to the government. Bank account, whatever the number of bank account you held, you have to give details of all the bank account and credit card to the government in your return of income. If you are not providing the details, then you are not eligible to file return of income because there is an error. And if the error is not solved, then the return is not getting uploaded. Expenditure exceeding the prescribed limit incurred by him under the prescribed head, and such other outgoing as may be prescribed. No, return, if the date is lapsed, then you cannot file revised return. You can file revised return, but within the dates given in this section. If the date is lapsed, you are not eligible to file revised return, even if there is a mistake or error. Because the date is given now, it is your responsibility to file your return within due dates. Particulars to be furnished with return of income in case of an assessee engaged in business or profession. If you are doing business or profession, then you have to give the following details along with your return of income. That is the report of audit. That is tax audit report. Specific section is given, referred to in section 44AB. Particular of location and style of principal place where he carry on business or profession in all branches. You have to provide the address of principal office, that is main office, registered office, and all the branches of the company. Name and address of partner. If it is a partnership firm, then name and address of all the partners. If it is association of personal body of individual, then name and address of all the members of AOP or BOI. Alok, you can see the form of income tax form on Google, but not particular person's return on Google. For that you have to log in on income tax portal for that person. So if you want to check my return, then you have to log in for my account, just like Facebook. You have an account for access of your account, you have to log in. So same on income tax. The share of profit, the share in case of the share of profit in case of AOP, BOI, etc. Clear, everyone? Option to file updated return. This concept is newly inserted. Say, for example, you miss the due date for filing original return. You miss the due date for filing belated return. So now the window is locked. You cannot file return of income, right? So in that case, you can file updated return. Or there is a question from Mr. Pitlarwala that what if I have filed my late return on 31st December and now I want to revise that return. Okay, so you have already filed late return and the date for revised return is lapsed. Okay, so in that case, you can file updated return. But in updated return, we will discuss section 140B later. That in updated return, you have to pay additional tax. जो tax आ रहा है that you have to pay, and on above that taxes, say for example, my original tax liability is 1 lakh. I have to pay 1 lakh, and over and above 1 lakh, I have to pay 25% of 1 lakh because I am filing an updated return. So if they have provided to file updated return, they also provided the additional tax burden to you so that in subsequently you can file return within due date. So any person may furnish updated return of his income or income of any other person in respect of which he is assessable for previous year relevant to assessment year at any time within 24 months from the end of assessment year. So say for example, for assessment year 23-24, you can file an updated return. You can file an updated return up to 31st March 26. That is 24 months, 2 years from the end of relevant assessment year. Irrespective of fact that even if you have not filed original return, not filed belated return, not filed revised return, you can file updated return at any time within 24 months from the end of relevant assessment year. But this provision is not applicable if updated return is return of loss. So if you have loss, then you cannot file updated return. See, the updated return is only allowed if you forgot to mention some income. And because of that income, your liability will increase. Okay. So you cannot file loss return as updated return. So if I forgot to file my return of income and I have loss under capital gain, so I cannot file updated return and claim the carry forward of losses. As effect of decreasing the total tax liability determined on the basis of return furnished under 139.1, 139.4 or 139.5. Say for example, I have already filed the return of income. Okay, whatever, original return, revised return, belated return. And after that, I forgot to claim certain expenditure. So in updated return, I cannot claim additional expenditure. Why? Because of that additional expenditure, my income will get reduced and my liability will also get reduced. Okay. So if because of updated return, your liability, tax liability determined under original return get reduced, then also you cannot file updated return. Result in refund or increase the refund due to on the basis of return furnished under 139.1 or 139.4 or 139.5. Yani, if in original return I have claimed refund of 10,000 rupees and in updated return I want to claim refund of 15,000 rupees to okay, so I cannot file the updated return because due to updated return my refund which I have claimed in my original return get increased. Okay, so in case of loss or in case of more refund, increased refund, or in case of decrease of tax liability as compared to original return, you cannot file updated return. So basically the concept of updated return is given to offer certain income which you forgot to offer in original return, or in case although you fail to file return within due dates or after due dates and the date for filing belated return is also lapsed, then only you can file the updated return. Circumstances in which updated return cannot be furnished. So if you have furnished one updated return once, then again for that assessment year, you cannot file updated return once again. So updated for any assessment year, you can file updated return only and only once. You cannot revise the updated return. For any proceedings for assessment or reassessment, or if your case is pending for assessment proceedings with the assessing officer, then in that case for that year, you cannot file updated return. Okay, and for such class or class of person as notified by the CBDT, till they have not notified, but they have power, they can notify. Other circumstances you will learn at final level. Updated return can be filed if original return is a loss return and updated return is return of income. If original return is a loss return and updated return will result in income, so obviously because of updated return they will get the tax because in original return there was a loss. Okay, so in case of loss there is no tax liability. But in case of updated return, if the loss resulted into profit, then they will collect the tax liability. So in that case, it is allowed. But if the original return is return of income and updated return of is return of loss, then you cannot file updated return. Got my point, everyone? If original return is return of loss and updated return is return of income, then you can file updated return. For example, Mr. X has furnished his return of loss for assessment year 22-23 on 31st May, consisting of 5 lakh as business loss. He can furnish an updated return for assessment year 22-23 up to 31st March 2025. If such updated return is a return of income. In original return, he has loss. Now, he can file updated return if the original return of loss will result in updated return. Clear, everyone? Now, say for example, for one particular year, you have filed the updated return, and because of updated return, your carry forward losses will get reduced. then for subsequent year also you have to file updated return. Why? Because say for example, on the basis of my original return, I am eligible to carry forward the loss of business loss of 1 lakh. Now, because of updated return, I am eligible to carry forward the business loss of 60,000 only. So for subsequent year, that loss is brought forward losses. Okay. So for subsequent years also, I have to update return of income. Clear, everyone? Everyone clear up till now? Yes, Alu, we can say that. Vedant, in my example, the loss will get reduced, not the loss will get higher. If there is an income, then only you can file updated return. Vedant. Clear? Clear, everyone? Next is defective return. If you identify the any error in your return, you can file revised return. Okay. But if assessing officer finds some error in your return, if assessing officer while processing the return, while checking the return, he will file the error in your return or any defect in your return. Then he will give you notice. That is, he may intimate the defect to the assessee. He will inform you that Mr. X or Mr. Y, I have find this error in your return. Kindly correct the same within a period of 15 days from the date of notice. If the assessee is not able to answer within 15 days, then obviously assessee can take time, and assessing officer can also provide the time for another 15 days. Okay, or whatever time he is able to do. For benefit of 115 BAC, you have to file return of income before due date. If you are filing return after due date, benefit of 115 BAC is not applicable. Yes, then you can file late updated return Vedant. So if assessing officer find any defect in your return, he will inform you that I found such defect in your return. Kindly correct the error within 15 days or such extended period at your option. But if assessee fail to rectify that error within 15 days or the extended period provided by the assessing officer, then the return is treated as invalid return. Then the return is treated as invalid return, and it is treated as if the return is invalid, then it is treated as the assessee has not filed the return. So if the defect is identified by the assessing officer, then you have to rectify the same within the period given by the assessing officer. Otherwise, the return will be treated as invalid return. And it is treated as if the assessee has not filed the return. A return of income shall be regarded as defective unless all the following conditions are fulfilled. If you have provided all the annexures, you have filed all the columns, all the data with whatever required in the return, and you have computed the proper tax liability, then your return is not treated as defective. But if you forgot to provide anything like नहीं condonation charges नहीं लगता उसके ऊपर. He will maximum give you another 15 days. That's it to correct your defect. They can ask for proof for claiming any deduction, or if you forgot to attach the audit report, then they can ask for the audit report also. Now, what are the details you have to mention in return. If these details are not mentioned by you in your return of income, then your return will be treated as defective. So where the regular books of account maintain, you have to provide the manufacturing account, trading account, profit and loss account, income expenditure account, or any other similar accounts or balance sheet. Revised return may you can change whatever you want to change. In case of updated return, only if there is increase in income, then only you can file updated return. In updated return, with your actual tax liability, you have to pay some additional taxes. In revised return, you are not required to pay any additional taxes. Because of increase in income, whatever your tax liability arise, you have to pay that, but not addition on to that. In updated return, you have to pay additional taxes. In updated return, you just have to mention your income only, not the headwise income, or you cannot claim additional deduction, you cannot claim additional loss, anything. In revised return, you can claim additional expenditure, you can claim additional loss, anything. Personal account, if it is a proprietary business, then personal capital account. In case of partnership firm, personal account of partner, that is capital account of partner. In case of AOB, BOI, capital account of members. You have to give all the details. You have to provide audit report. If the cost audit is also applicable, then you have to provide the cost audit report along with the return of income. 139 4 point number. Say, for example, you have not rectified the mistake within due date or within the extended period, but before the assessing officer complete your assessment, if you file the correct return or rectify that mistake, then assessing officer can consider that rectification and treat your return as valid return. Where books of account are not maintained by the assessee, then say, for example, you are opting for presumptive taxation. Okay. So in that case, you have to provide the total turnover or gross receipt, because you are providing 8% or 6% of your turnover as your profit. Your gross profit, your expenses, if your net profit, amount of sundry debtor, creditor, stock in trade, cash balance. This four detail you have to provide even if you are offering income under presumptive scheme. Up till now, clear everyone? Everyone clear up till now? See, it is very easy chapter. No. Pitladwala, no. We will discuss 140B. In 140B specifically, they have given that. Say, for example, my tax liability in updated return, my tax liability comes to 1 lakh. I have to pay 1 lakh rupees as tax liability. In addition to that, I have to pay 25% of my tax liability, that is 25,000 additionally. So if I am filing my return of income within due date, then I have to pay only 1 lakh rupees. But if I am filing return of income after due date, that is if I am filing return as updated return, then I have to pay 1,25,000. This provision is given if someone is inadvertently forgot to file return of income. But as a professional, your intention is always your client should file their return within due date. Otherwise, additional tax burden will arise on your client. Okay, and you cannot claim additional benefit or anything. You have to pay tax on that income. That's it. Dhyanesh, it is pending. Wait for a minute. We will discuss to link of PAN with Aadhaar. Up till now, everyone clear? So let us discuss now the concept of permanent account number, PAN. Subsection 1 require the following person mentioned in column 2 who have not been allotted PAN to apply the assessing officer within prescribed limit mentioned in column 3. So if you are a person mentioned in column 2, then you have to apply for PAN to assessing officer within the date mentioned in column 3. So every person, if his total income or total income of any other person in respect of which he is assessable under this act during the previous year exceed the maximum amount which is not chargeable to tax. Say for example, in current year, your income will exceed 2,50,000. Then you have to apply for PAN on or before 31st May of assessment year so that you are eligible to file your return of income within up to 31st July. You have 2 months time to file your return of income. So if my income is exceeds in current year more than 2,50,000, then I have to immediately apply for PAN before 31st May of assessment year. Every person can, this provision is for those person who have not applied for PAN till the date. Okay. So if a person carrying on business, say for example, Mr. X is carrying on business and he does not have PAN. Now in current year, if his total sale or turnover or gross receipt is likely to exceed 5 lakh. Say for example, my dear friend, in Feb month, you have an idea that whether my receipt will increase or not. So he has to apply for PAN before the end of financial year, before the end of previous year. Every person being a resident other than an individual which enter into a financial transaction of an amount aggregating 2,50,000 or more in a financial year. Say for example, a company entered into a financial transaction of rupees 2,50,000 or more. Then the company has to apply for PAN on or before 31st May of the immediately following financial year. Every person who is managing director, partner, trustee, author, founder, karta, CEO, principal officer of company, then they have to apply for PAN before 31st May of immediately following financial year. Generally, for opening of bank account, the bank will need PAN. So normally, well, practically everyone will apply for PAN if they want to open a bank account. In case of major, not in case of minor. In case of minor, PAN of parents is required to be given. The central government is empowered to specify by notification in official gazette that any class or classes of person by whom tax is payable under the act or any tax or duty is payable under any other law for the time being in force. Such persons are required to apply PAN within such time as specified by in the notification. So if you are required to pay income tax, then also you need PAN. Or it is not compulsory that if you fall under the above category, then only you can apply for PAN. Even if you are having zero income, can apply for PAN. Okay, an assessing officer is bound to give PAN to you, bound to allot PAN to you. Okay, so it is not compulsory that if you are having income, then only you can apply for PAN. PAN comprise 10 alphanumeric characters. Quoting of PAN is mandatory in all the documents pertaining to the following prescribed transaction. There are certain transactions on which the mentioned PAN is compulsory. Form 6061 we will discuss later. In all the return to or correspondence with any income tax authority, आपको income tax authority, if you want to do any communication, you have to mention your PAN. If you want to pay any tax under the Income Tax Act, then also for the challan payment, you have to obtain PAN. In all documents pertaining to such transaction entered into by him as may be prescribed by CBDT. There are certain transactions that are prescribed by the CBDT. If you are doing that transaction, then you have to apply for PAN. You have to mention your PAN. Okay. So there are certain transactions are given for which you have to mention your PAN. So first is sale or purchase of motor vehicle or vehicle as defined in Motor Vehicle Act 1988, which required registration by registering authority under the Act other than two-wheel vehicles. So if you are purchasing, say for example, car, then whatever is the amount of car or whatever is the amount of truck or anything other than two-wheeler, then the mention of PAN is compulsory. So you have to provide your PAN. That is your permanent account number. Opening an account other than deposit. For deposit, it is provided in serial number 12 that we will discuss at that time. A basic saving account with the bank, cooperative society, to which Banking Regulation Act applies. So if you want to open a saving bank account in any bank, then you have to provide your PAN to the bank. As I earlier said that PAN is mandatory for opening and saving account. Making an application to any banking company or cooperative bank to which Banking Regulation Act 1949 applies, or to any other company or institution for issue of debit or credit card. So if you want to apply for debit or credit card, then also you have to give your PAN to the bank. Opening of Demat account with depository, participant, custodian of security, or any other person registered with SEBI. So, say for example, for dealing in share, Demat account is mandatory. Okay, so if you want to open a Demat account, then also you have to provide your PAN to the depository. For example, if I want to open a Demat account with the Sheikh Khan, then I have to provide my PAN to the Sheikh Khan. Payment to hotel restaurant against a bill or bill at any one time. Here they have written a word one time. So if you are paying a bill to hotel at one time, single payment, okay, and the payment in cash. If you are paying in any mode other than cash, then PAN is not mandatory. But say for example, if a person went for an audit, if an auditor went for an audit and stay in hotel for 10 days, and the bill of hotel is rupees 60,000, and Mr. X, as an auditor, pay such bill of 60,000 in cash, then in that case, Mr. X is required to provide his PAN to the hotel. Why? Because one-time payment in cash is more than 50,000 rupees. The alphabet of PAN. So first 5 characters are alphabetic, last character is alphabetic, and middle 4 characters are numeric. That is the format of PAN. The fourth character denotes the status of the category of person, that is individual. If it is a company, if it is an if the PAN holder is an individual, then the fourth character is P. If PAN holder is a firm, then the fourth character is F. If the uh, PAN holder is a company, then the fourth character is C. The fifth character is first alphabet of name of person. Say for example, my name is Rangoli, so fifth character is R. If some company's name is XY ABC Limited, then the fifth character is A. Okay, clear, Vedant? Next, payment in connection with travel to foreign country or payment for purchase of any foreign currency at any one time. So if you are paying for purchase of foreign currency, if you are paying for purchase of foreign currency, then if the payment is single payment is made in cash amounting to more than 50,000, then you have to provide your PAN. Payment to mutual fund for purchase of its unit. If you are purchasing mutual fund and the value of mutual fund is more than 50,000, then you are required to provide your PAN to the mutual fund companies. Payment to company or an institution for acquiring debenture or bond issued by it. For purchase of debenture or bond, you have to, if the value of debenture or bond is more than 50,000, then you have to provide your PAN to the company. Payment to Reserve Bank of India for acquiring bond issued by it. If you are purchasing the bond that are issued by the Reserve Bank of India, RBI, and the amount of bond is more than 50,000, then you have to provide your PAN. Deposit with banking company or cooperative bank to which Banking Regulation Act applies, or post office. Cash deposit exceeding 50,000 during any one time. So if, say for example, if you are depositing any cash to the bank and the deposit, single deposit is more than 50,000, then you have to provide your PAN to the bank. Purchase of bank draft or pay order or banker's check from banking company or cooperative bank to which banking regulation applies. Payment in cash of an amount exceeding 50,000 at any one time. See, my dear friend, if you have to pay, you have to make payment by way of bank draft. Okay, so you have to purchase the draft from bank. So for purchase of draft, what generally a person can do is they purchase the draft from the bank in which they have saving account. Okay, but say for example, I want to purchase a draft in from the bank in which I does not have a saving account. So what I can do, I will deposit cash to that. I will give cash to that bank, and bank will give me the draft for the same amount. Okay. See, whenever it is given one payment, that is single payment, otherwise aggregate. So if I want to purchase a bank draft, and for the purchase of bank draft, if I'm depositing cash to the bank more than 50,000 for single transaction, then I have to provide my PAN to the bank. A time deposit with banking company or cooperative society to which Banking Regulation Act apply, post office, nidhi companies, non-banking financial company who hold a certificate of registration under Section 45 IA of RBI Act to hold or accept deposit from public. Amount exceeding 50,000 or aggregating to more than 5 lakh during a financial. So if you are making a bank deposit, fixed deposit, recurring deposit, you have to provide your PAN to the bank. Payment for one or more prepaid payment instrument as defined in policy guideline for issuance and operation of prepaid payment instrument issued by RBI. So if you are purchasing a prepaid instrument and you are making payment in cash or by way of bank draft or banker's check of an amount more than 50,000 in a financial year, here they have provided aggregate. So the aggregate value is more than 50,000, then you have to provide your PAN. Payment as life insurance premium to insurer as defined in Insurance Act 1938. If you are paying LIC premium and the amount, aggregate amount paid by you during the financial year is more than 50,000, then you have to provide your PAN to the LIC. A contract for sale or purchase of share of a company not listed in a recognized stock exchange, that is private company or unlisted public company. So if you are purchasing shares of a private company or selling share of private company and the transaction value, that is the sale or purchase price of that shares is more than 1 lakh per transaction, then you are required to mention your PAN. Sale or purchase of any immovable property, amount exceeding 10 lakh or valued by Stamp Valuation Authority, referred to in section 50C at an amount exceeding 10 lakh. So if you are purchasing any immovable property and the value of that property or stamp duty value of that property is more than 10 lakh rupees, then you have to provide your PAN to the registrar of that company. That jurisdiction. And you may have knowledge of annual information system. This all transactions are reflected in your annual information system of income tax, annual information statement. For sale or purchase by any person of goods or service at any nature other than those specified in serial number 1 to 17, it is general. Amount exceeding 2 lakh per transaction. Say, for example, if you are purchasing any goods, okay, and the value of goods is more than 2 lakh rupees per transaction, not aggregate, single transaction is more than 2 lakh, then you have to provide your PAN. Minor to quote PAN of parents or guardian. As I told you that if minor enter into any such transaction, and minor does not have PAN, then minor has to provide his parents' PAN or legal guardian PAN. Where a person entering into any transaction referred to in this rule is minor and who does not have any income chargeable to income tax, he shall quote PAN of his father or mother or guardian as the case may be in the document pertaining to said transaction. Yes, if the jewelry value is more than 1 lakh for single transaction, then you have to provide PAN to the jeweler. Up till now, everyone clear? Yes or no? Everyone clear up till now? Declaration by a person not having PAN. If you are having any person who does not have PAN and who enter into any transaction specified in this rule, then the person is required to make a declaration in Form 60, giving therein the particular of such transaction either in paper form or electronic. No, see, at the deposit slip, you have to mention your PAN. Okay. Somesh, I am audible to everyone. Please check your connectivity or your device. So if any person does not have PAN and enter into the transaction mentioned in above table, then they have to make a declaration in Form 60. You can file a Form 60 either in paper form or electronically by verification of EVC code. Non-applicability of Rule 114B. The provision of this rule shall not apply to the following class or class of person. So the central government, state government or consular offices are not required to provide their PAN for the above transactions. Non-resident referred to in section 2 subsection 30 in respect of transaction other than referred to in serial number 1, 2, 4, 7, 8, 10, 11, 14, 15, 16, 17. So other than that, so say for example, if a non-resident enter into a transaction of one first, that is the sale or purchase of motor vehicle, then he has to provide his PAN. Other than this, other than this transaction, non-resident is not required to mention their PAN. Meaning of certain phrases, that is payment in connection with travel. So payment towards fare to travel agent or tour operator or to authorized person as defined in FEMA. Travel agent or tour operator. A person who make arrangement for air service or maritime travel or provide service relating to accommodation, tour, entertainment, passport, visa, foreign exchange, travel related insurance or other travel related service either severally or in package. Time deposit means any deposit which is repayable after expiry of fixed period. Say for example, you can make a deposit for 1 year, 2 year, 3 year, and after expiry of that period, you will get your deposit amount. If there is change in address or in the name and nature of business of a person on the basis of which PAN was allotted to him, he should intimate such change to the assessing officer. Say for example, in case of girls, if you at the time of applying PAN, you are unmarried. Okay. And after that, after your marriage, your address will change, your name, your surname will change. Then in that case, you have to apply for change in PAN. Every person who receive any document relating to any transaction cited above shall ensure that PAN or Aadhaar number is duly quoted in the document. Everyone clear up till now? We will take a break of 5 minutes and after that we will discuss the intimation of PAN to person deducting or collecting tax at source. Mr. Ashok, we are on break for 5 minutes. So next is intimation of PAN to person deducting or collecting tax at source. We have already discussed this in TDS TCS chapter that if your TDS is deducted or TCS is collected, then you have to provide your PAN to deductor or the collector of TDS. If you fail to provide your PAN to collect deductor or collector, then in that case they will deduct your TDS at the higher rate. Okay, so you have to provide your PAN to the person deducting or collecting tax at source. Quoting of PAN in certain cases. There are certain cases in which PAN is mandatory. So where any amount has been paid after deducting, so it is applicable for deductor. If deductor is deducted TDS, then they have to mention your PAN in the return of TDS so that you can claim the credit of that TDS. In all these certificates, that is form 16, 16A, they have to mention your PAN. In all the returns, that is the TDS return they have delivered or prepared or provided to the government, they have to mention the PAN of deductee. The same is applicable in case of TCS. The collector is required to mention the PAN of the person whose TCS is collected in all the certificates, in TDS return, in all the statement prepared by the collector. Requirement to intimate PAN and code PAN not to apply in certain cases. These rules are not applicable in case you does not have taxable income or who is not required to obtain PAN, that is the non-resident or the person. Okay, so if you are having zero income, then it is not mandatory for you to apply the PAN. Interchangeability of PAN with Aadhaar number. You can use your Aadhaar number instead of PAN. Every person who is required to furnish or intimate or code his PAN may furnish or intimate or code his Aadhaar number in lieu of PAN if he has not been allotted PAN but possesses Aadhaar number and has been allotted a PAN and has intimated his Aadhaar number to prescribed authority in accordance with the requirement contained in section 139AA. PAN would be allotted in the prescribed manner. Form 49 you have to file for application of PAN to person who has not been allotted a PAN but possesses Aadhaar number. So if you are having an Aadhaar, on the basis of your Aadhaar, you can file an application to assessing officer for issue of PAN. Quoting and authentication of PAN and Aadhaar number. Every person entering into such prescribed transaction is required to code his PAN or Aadhaar as the case may be in the document pertaining to such transaction. So if you are having an Aadhaar, so instead of PAN, you can mention your Aadhaar number also in all the documents which mandatorily require to code the Aadhaar number or PAN. And every person receiving such document relating to such transaction has ensured that the PAN or Aadhaar has been mentioned on the documents. Power to make rules. The CBDT is empowered to make rule with regard to the following. Obviously, CBDT has power to make rules, notification, everything relating to Income Tax Act. The form and manner in which application for PAN may be made and particulars to be given. That is Form 49. The category of transaction in relation to which PAN or Aadhaar number, as the case may be, is required to boost. We have discussed the 18 transactions and which the PAN is mandatory. So CBDT can extend such transaction, can extend the limit. They have power. Category of document pertaining to business or profession in which PAN or Aadhaar, as the case may be, shall be quoted by every person. The class or class of person to whom this provision is applicable. The form and manner in which person who has not been allotted a PAN shall make a declaration. That is Form 60. The manner in which PAN or Aadhaar number, as the case may be, shall be quoted for transactions cited in B above. Time and manner in which such transaction cited in B above shall be intimated to prescribed authorities. Meaning of certain term, that is Aadhaar number. An identification number issued to an individual by authority on receipt of demographic information and biometric information after verifying information by the authority. An authentication is the process by which PAN or Aadhaar number along with demographic information or biometric information of an individual is submitted to income tax authority or such other prescribed authority. So you have your name, your surname, both are same. Your date of birth should be same in Aadhaar as well as in PAN. That is the authentication. Quoting of Aadhaar number. Mandatorily quoting of Aadhaar number. Every person who is eligible to obtain Aadhaar number is required to mandatorily quote Aadhaar number in application form for allotment of PAN. So if you are having an Aadhaar and you are applying for PAN, then you have to mention your Aadhaar number in the application form of PAN in return of income. It is mandatory for every person to mention their Aadhaar number in your income tax return. So after 1st April 2019, CBDT make it mandatory that you have to mention your Aadhaar number while filing your return of income. So that on the basis of Aadhaar number, whatever mobile is linked with your Aadhaar, you can generate an OTP, and on the basis of that OTP, you can verify your return of income electronically. So there is no need to sign your return of income and send it to the income tax office. Okay, so Aadhaar PAN linking is mandatory. That we will discuss linking of Aadhaar PAN, but after 1st April 2019, if you are filing your return of income, you have to provide your Aadhaar number in your return of income. Mandatory quoting of enrollment ID where person does not have Aadhaar number. If a person does not possess an Aadhaar number but applied for the Aadhaar number, then at the time of application, they provide you the enrollment ID. That is of 28 digit. So if the Aadhaar number is not issued, then at the time of filing return of income, you have to provide the enrollment ID. Yes, Manoj. If you are non-resident, then it is not mandatory. Intimation of Aadhaar number to prescribed authority. You have to provide your Aadhaar number and link your Aadhaar number with your PAN on income tax portal before 31st March 2022. There are certain category who are exempt for linking of Aadhaar with PAN, but other than that, it is compulsory for all the individual to obtain an Aadhaar and link your Aadhaar with your PAN before 31st March 22. Consequences of failure to intimate Aadhaar. If you fail to intimate your Aadhaar to income tax authority, that is, if you fail to link your Aadhaar to your PAN, then your PAN become inoperative. And if your PAN number, that is your permanent account number, become inoperative, so after the date of inoperative PAN, you are not able to file your return of income. You cannot claim refund from income tax department. You cannot provide your PAN to any authority or for any transactions. So linking of Aadhaar with PAN with Aadhaar is mandatory. So if you fail to link your Aadhaar with your PAN, then your PAN would become inoperative after 31st March 22. But CBDT extend this date, linking of Aadhaar with PAN. Now it is mandatory to link your Aadhaar with your PAN up to 1st April 23. But yes, After 31st March, if you are linking your Aadhaar with your PAN, you have to pay additional fees under section 234H. Up to 31st March 22, it is free. You just have to link your Aadhaar with your PAN. After 31st March 22, if you are linking your Aadhaar with your PAN, you have to pay additional fees. And up to 31st March 23, only you can link your Aadhaar with PAN. After 31st March 23, if you fail to link your Aadhaar with your PAN, then your PAN will become inoperative. Clarification with respect to relaxation, yani those who are not required to link their PAN with Aadhaar. It is mandatory for every person who has been allotted PAN as on 1st July 2017 to intimate his Aadhaar number so that Aadhaar and PAN can be linked. This is required to be done on or before the notified date, that is 31st March 22. After 31st March 22, you can link your Aadhaar with your PAN, but by way of paying an additional fees up to 31st March 23. After 31st March 23, if you are failed to link your Aadhaar with your PAN, then your PAN becomes inoperative. Accordingly, in case of failure to intimate the Aadhaar number by 31st March 22, the PAN allotted to person would be made inoperative. Further, Section 234H provided where a person who is required to intimate his Aadhaar fail to do so on or before the notified date, he would be liable to pay a fee not exceeding 1,000 as the case may be. So after 31st March 22, if you are linking your PAN with your Aadhaar, then you have to pay 1,000 fees. Further, Rule 114AAA provides that if PAN of a person has become inoperative, now if you fail to link your Aadhaar with your PAN, then your PAN become inoperative. So in that case, you are not able to furnish, intimate or quote your PAN and would be liable to all the consequences under the Act for such failure. So in this case, the consequences of failure of everything is applied to you. This will have a number of implications such as the person would not be able to file return of income because the PAN is inoperative. Pending refund will not issued. Pending return will not processed. You cannot correct your defective return if your PAN become inoperative. Your tax is required to be deducted at higher rate because the PAN is inoperative. So it is the responsibility of deductor to deduct TDS at higher rate. In addition to that, whenever the KYC criteria is there, your KYC is pending because of your PAN is inoperative. Okay, so they have provided some relaxation that because of COVID, if you fail to link your Aadhaar with your PAN up to 31st March 22, you can still link your Aadhaar with your PAN up to 31st March 22 by way of paying a fees of rupees 1,000. Everyone clear up till now? No. If you are applying for, see, every person has a unique PAN. You cannot apply multiple PAN on same name. Okay. So if you are applying for the first time, then at the time of application, you have to mention your Aadhaar. So automatically they both are linked. Okay. So in that case, you are not required to pay 1,000 additional fees. And the provision is for those who already have PAN. Clear, Alok? Now, the linking of Aadhaar PAN provision is not applicable to certain class of person, that is residing in those who are residing in Assam, Jammu, Kashmir, and Meghalaya, non-resident as per Income Tax Act, for individual of the age of 80 years or more at any time during the previous year, and not a citizen of India, foreign citizen. They are not required to link their Aadhaar PAN. Fee for default relating to intimation of Aadhaar number. So if you are failed to up to 31st March 22, it is free to link your Aadhaar with your PAN. After 31st March, you are required to pay additional fees of rupees 1,000 for linking of PAN with Aadhaar. Now, it is compulsory for everyone to link their Aadhaar with PAN on or before 31st March 23. So make sure at your home, everyone's PAN is linked with their Aadhaar. Aadhaar is linked with PAN. Okay. Now the late filing fees is 1,000 rupees, but if you link your Aadhaar with PAN after 31st March 22, that is 1st April 22 to 30th June 22, then the fees for linking is 500. And after that, it is 1,000. Clear, everyone? Up till now, everyone is clear? Yes or no? Anand, Manoj, Alok, Manisha, Bharat, Dhyanish, everyone clear up till now? Yes or no? Please give me a reply so that I will proceed. Anand, Dhyanish, Manisha, Manoj. They are backward areas, that's why. Chalo. Next is scheme for submission of return through income through tax return preparers. There are tax return preparers who can help you to prepare your return and upload your return. If you file your return with the help of tax return preparers, then in your return of income, you have to mention the detail of tax return preparers. That is, this individual is help me in filing my return of income. Okay. So this section provided for the purpose of enabling any specified class or class of person to prepare and furnish the return of income. The CBDT may notify a scheme. Generally, the person will visit the chartered accountant for filing return of income, but there are tax return preparer who help you to file your return of income. Tax return preparer shall assist the person furnishing the return in the manner that will be specified in the scheme and shall also affix his signature on such return. So if you are a tax return preparer and if you are assisting someone to file their return of income, then in that case, in their return, you have to attach your signature also as income tax return preparer. Income tax preparer means, tax return preparer means any individual other than any officer of scheduled bank. If you are officer of scheduled bank, then you cannot act as a tax return preparer. Any legal practitioner, because they are eligible to file someone's return, their client's return. An accountant. So as a chartered accountant, you cannot call yourself as tax return preparer because you are providing consultancy to your client for filing return of income. Employee of the specified class or class of company who has been authorized to act as tax return preparer under the scheme. The specified class or class of person means any person other than company or person whose accounts are required to be audited under section 44AB or under any other existing law, who is required to furnish a return of income under the Act. So an employee of specified class or class of company means any person other than company or person whose accounts are required to be audited. So any person other than company and an individual whose accounts are required to be audited under 44AB, other than those, can act as income tax return preparer. Employee Employee of specified class or class of company. So if you are an employee of company whose account are required to be audited, then you can act as a tax return preparer, because here they have mentioned that other than employee of specified class or class of company, and specified class or class of company exclude those company are those companies employee and those persons employee whose account are required to be audited. So yes, yes, Sumesh, that we will discuss. The scheme notify under this said section for the following: the manner in which and the period for which tax return preparer shall be authorized, the education and other qualification of a person who want to act as tax return preparer, the training, whatever training they require, the code of conduct, the duties and obligation of tax return preparer, the circumstances under which the authorization given to tax return preparer may be withdrawn, and other relevant matter. So the applicability of the scheme is applicable to all eligible employee. Now all the eligible person. So eligible person means any person being an individual or HUF. So income tax return preparer, that is TRP, can file return of individual and HUF only. They are not allowed to file return of firm, partnership firm, LLP, company, AOP, POI, nothing. They are only eligible to file return of income of individual or HUF. Tax return preparer means an individual who has been issued a tax return preparer certificate. For that, you have to apply and you have to pass one exam. And a unique identification number under the scheme by the partner organization to carry on profession or business of return of income in accordance with the scheme. However, following person are not entitled to act as tax return preparer, that is officer of scheduled bank, legal practitioner, accountant. Educational qualification means they should hold bachelor degree from any recognized Indian university. They have mentioned Indian university. So if you are foreign graduate, then you are not eligible to act as tax return preparer. Preparation of and furnishing the return by income tax return preparer. An eligible person, that is individual or HUF, at his option, furnish his return of income under 139 for any assessment year after getting it prepared to income tax preparer. Very good, Manish Shabin. However, the following eligible person, that is individual or HUF, cannot furnish the return of income for an assessment year through income tax return preparer if they are carrying on business or profession and their books of account are required to be audited, or and those individual or HUF who is not resident in India during the previous year. So say for example, if you are an individual and you are non-resident, then you are not eligible to file your return of income through income tax return preparer. Okay. And if you are an individual and you are having a business income and your books of account are required to be audited under Income Tax Act or under any other law, then also you are not eligible to file your return of income through tax return preparer. Further, say for if eligible person, yani individual and HUF, cannot furnish revised return through tax return preparer unless the original return is also filed by tax return preparer. So say for example, you yourself file your original return. Now you want to revise your original return through tax return preparer, then you cannot do that. If your original return is filed by tax return preparer, then only your revised return will filed by tax return preparer. Illustration 3. Mrs. Hetal, an individual engaged in the business of beauty parlor, has got her books of account audited for financial year 31st March 23. Audited under section 44AB. Her total income for assessment year 23-24 is 6,35,000. She want to furnish her return of income for assessment year 23-24 through tax return preparer. Can she do so? Yes or no? Chalo, everyone give me your answer. Can she do so? No, she cannot do so. Why? Because she is having a business income and her books of account are required to be audited under section 44AB. That's why she cannot furnish her return of income through tax return preparer. Power of CBDT to dispense with furnishing document with the return and filing of return in electronic form. See, if you are filing your return of income electronically, Mohammed, she cannot do that. Electronically, then you are not required to provide all the payments, all the bank book, cash book, all the books of account to the income tax department. Okay, you are not required to provide all the documents. What you are required to provide, you are required to just provide the tax audit report or signed balance sheet or profit and loss account. However, whenever assessing officer demand for certain receipts or certain statements, say for example, if they are asking for bank statement or they are asking for uh, chartered accountant can file, an advocate can file, in assessee himself or herself can file the return. In case of audit, it is advisable to file a return with ES Mohammed with CA. So, with along with your return, it is not required to provide all the details of your all the annexures. They are like bank statement, payment voucher, receipt voucher, anything. But yes, whenever assessing officer asks for you to produce the statement, receipt, certificates before them, then you have to provide that. Section 139, the empower the CBDT to make rules providing for class or class of person who shall be required to furnish the return of income in electronic form. Now it is compulsory for everyone to file their return electronically. Earlier it was there if you are a senior citizen and if your income again here the criteria is there. If you are a senior citizen and your income is less than 5 lakh, then you can file your return via paper form. Otherwise, everyone is required to file their return electronically, that is on income tax portal only. Now the person, say for example, you file your return. Now who will sign the return? You have to sign your return, okay? So in case of individual himself or herself will sign the return. But in case of company, partnership firm, LLP, in case of company who went into liquidation, who can sign the return? Okay. So in case of individual himself is required to sign the return where he is absent from India. Now he is non-resident. At present, it is possible for non-resident also to sign the return via electronic verification code. But now, say for example, it is not possible. He is absent from India and it is not possible for him to sign the return. In that case, see, the individual himself can sign or he is not able to sign. Then in that case, the person authorized by him in this behalf, holding a valid power of attorney, that that person can sign the return. Where he is mentally incapacitated from attending to his affair, then he is mentally disabled, then his guardian or any other person competent to act on his behalf can sign his return. For any other reason, it is not possible for the individual to verify the return. Then those person duly authorized by an individual to sign on his behalf and having a valid power of attorney can sign the return on behalf of an individual. In case of HUF, Karta need to sign the return. If Karta is absent from India, then any other adult member of HUF can sign the return. If Karta is mentally incapacitated from attending to his affair, then also any other adult member of the HUF can sign the return, but not the minor. Okay. Company. Normally, the managing director of company is required to sign the return of company, where for any unavoidable reason, such managing director is not able to verify return or there is no managing director. Then in that case, any other director of the company can sign the return or any other person authorized or any other authorized person can sign the return. Where company is not resident in India, then the person who holds valid power of attorney can sign the return. Where company is being wound up, whether under the order of court or otherwise, then the liquidator can, at the time of winding up, you have to appoint a liquidator. So liquidator can sign the return. Where any person has been appointed as the receiver of any asset of the company, then the liquidator can sign the return. Where the management of company has been taken over by central government, state government or any other law, then the principal officer of company can sign the return. Where an application for corporate insolvency resolution process has been admitted by adjudicating authority, your company will went into bankruptcy, then the insolvency professional appointed by adjudicating authority will sign the return of company. In case of firm, the managing partner of the firm is required to sign return. Where for any unavoidable reason managing partner is not available or there is no managing partner, then any partner of the firm can sign the return, but not the minor partner. In case of LLP designated partner, if designated partner is unavailable and there is no designated partner, then any partner of the LLP can sign the return. For local authority, the principal officer. For political parties, return the chief executive officer of such party. Any other association, any member of the association or principal officer of association can sign the return. Any other person, the person or some other person competent to act on his behalf. Self-assessment. Self-assessment means the total tax required to be paid as per the calculation of income tax done by you. Whatever amount is payable after taking into account the tax already paid, that is advance tax, tax deducted at source, tax collected at source, alternate minimum tax credit. After taking into account all the tax, if the designated partner is not available, if he has some medical emergency, if he is hospitalized or anything, then what happens, Dhyanish? Then any partner can sign. Say for example, on my income, my net tax liability is 1 lakh. From that 1 lakh, I have already paid advance tax of rupees 50,000. There is TDS of rupees 30,000. So now this 20,000 I need to pay to the government. That 20,000 I will pay after the end of previous year. So that is called as self-assessment tax. That is the amount of tax payable by a person to the government after taking into account advance tax, TDS, TCS, AMT credit, everything. Order for adjustment of amount paid by the assessee. Whatever amount you paid as self-assessment tax, first that amount is adjusted against fees late filing fees. Then after that amount is adjusted again interest, and if there is any balance is there, then the same is adjusted again the tax payable amount. So say for example, if I am paying 15,000 to the government, I require to pay 20,000. Okay. So if I am paying 15,000, so first this 15,000 is adjusted again fees, if is there any fees is there, or second is interest, and after that it is adjusted again the tax payable amount. Interest under 234A we have already discussed. I have explained the interest under 234B also. 234B is for shortfall of advance tax. If you are not paying 90% of your advance tax up to 31st March 22, then on the shortfall, you have to pay interest under 234B from 1st April to the date of payment of full tax. If you are failed to pay tax, interest or fee, then you are treated as assessee in default, and any penal provision, that is the penalty, interest, imprisonment may levy to you. Okay, it is the quick recap. Now let us discuss, we have discussed the updated return. Now let us discuss the tax on updated return. What is the tax liability you are required to pay on updated return? If no return is furnished earlier, you forgot to file your return of income, and the due date for filing belated return is lapsed, revised return is lapsed. So now you can file updated return up to 24 months from the end of relevant assessment year. Yes or no? Yes. So in that case, if the original return is not filed, belated return is not filed, and you are directly filing the updated return, because the due date for filing original return, belated return is lapsed. Okay. See, first you have to file your return within due date. Yes, Somesh. Or if you forgot to file your return within due date, then you have to file your return within the due date of belated return. That is 3 months prior to end of assessment year. And if you miss that date, then only you can file updated return. Okay. You directly cannot file updated return. So if you fail to file original return or fail to file belated return, then you can file updated return. So if you are filing the updated return for the first time, then when no return of income under section 139(1) or 139(4) has been furnished by an assessee, and tax is payable on the basis of updated return to be furnished by assessee under section 139 subsection 8A, the assessee would liable to pay such tax together with interest and fees payable. So you have to pay interest under section 234A, B, C along with late filing fees. ऐसा नहीं है कि you are filing updated return, so you are exempt of for payment of interest or late filing fees. No, you have to pay interest, you have to pay late filing fees. For any delay in furnishing the return or any default or delay in payment of advance tax. So if you are filing updated return, so you have to pay interest from the due date of filing of return of income to the date of filing of updated return. So the interest is very huge, my dear friend. The tax payable is to be computed after taking into account the following. If you have already paid any advance tax, you are eligible to claim the credit of advance tax, obviously. Tax TDS, TCS, AMT, anything. If return is furnished earlier, if you have already furnished the return earlier and now you are filing updated return, so in that case also, say for example, see, I'm eligible to file updated return only when there is increase in income or there is increase in tax liability. Otherwise, I'm not eligible to file updated return. Okay. So in that case, if my income is increased as compared to original return, then I have to pay additional tax? Yes. So in that case, I have to pay additional tax along with interest on additional tax, because whenever I file the original return, up to the date of filing original return, whatever amount of interest, late filing, whatever amount of tax is there, I have already paid the same. Now I am filing an updated return. In updated return, I am opening an additional income. So because of that additional income, whatever tax liability arises, that I have to pay at the time of filing updated return. Okay, so at the time of updated return, you have to calculate your revised tax liability. From revised total tax liability, you have to deduct the tax already paid in earlier return, the credit already taken in earlier return, and after that, whatever balance came, you have to pay that to the government. 2 years from the end of assessment year. So for financial year 22-23, the end of assessment year is 24. So you can file the updated return up to 31st March 26. Additional income tax payable at the time of updated return, as I have told you earlier, that say for example, earlier my tax liability is 1 lakh. Now, because of updated return, I am offering higher income, other income, my tax liability comes to 1,20,000. So I have to pay additional 20,000. Yes or no? Yes. Now on this 1,20,000, I have to pay it. See, I have to pay that 20,000 because 1 lakh I have already paid. But over and above 1,20,000, I have to pay 25% of 1,20,000. What is the 25% of 1,20,000, everyone? $30,000. So if I am filing updated return, I need to pay 30,000 extra. So I have to pay 1,50,000. If I am filing updated return within 12 months from the end of relevant assessment year, and 50% of aggregate tax, that is 60,000 in our case, that is 50% of 1,20,000, that is 60,000 in our case. I need to pay additionally over and above 1,20,000 if I am filing updated return after expiry of 12 months but before completion of 24 months from the end of relevant assessment year. So you have to be careful. You should file your return within due date only. Otherwise, there is an additional burden of tax. Interest under 234B, where earlier return has been furnished. Whenever you file your earlier return, now you are increasing your income, so your tax liability revised tax liability, you have to pay interest under 234B from the 1st April of assessment year to the date of payment of additional tax. You have to pay additional interest under section 234B also. Say for example, here the 20,000 is my additional tax liability. So obviously it is more than 90%, less than 90% of my total tax liability. So I have to pay 1% interest per month from the 1st April of assessment year to the date of payment of this 20,000, 1% per month interest under section 234B. CBDT have power to provide the guidance for calculation of this tax. For the purpose of additional tax, you have to include everything, including surcharge, including cess on that base, on that tax 25% additional tax you require to pay. Interest under Section 234A if no earlier return has been furnished. In case where no earlier return has been furnished, the interest payable under Section 234A has to be computed an amount of tax on the total income as declared in the updated return. So you have to pay interest under Section 234A, that is from the due date. Yes. No, Somesh, not one, but yes, in 234A, that is 1% of 1,20,000 from the due date, actual due date, original due date to the date of payment. Again, 234C interest is also there. We have discussed 234C, that is shortfall of for payment of advance tax quarterly, right? So if no earlier return has been furnished, then on revised income, you have to consider the interest under Section 234C also. Yes, Vedant. So up till now, everyone clear? Yes or no? Just let me know so that I will we will quickly go through these updates, statutory updates for your attempt. Everyone, up till now, everyone is clear? Yes or no? Please reply, everyone. If assessee fail to file return, then in that case, there is a reopening of case that you will study in final level. So there is a reopening of case provision is there that you will study in final level. As per the reopening of case, you will file the return. No, Bitlatala. In that case, the interest is not applicable because they have already paid all the taxes. 234B is given in advanced tax chapter, detailed calculation. So let us go through the provision statutory update for provision for filing return of income. Requirement of application for allotment of PAN by certain person. We have discussed that. Okay, for in that they have add that in that category they have add additional 3 categories. So let us discuss this. For widening the tax base, every person who has not allotted PAN and intend to enter into such transaction as prescribed by CBDT is also required to apply the assessing officer for allotment of PAN. Accordingly, Rule 114BA has been inserted with effect from expiry of 15 days from 10th April, 10th May 22 to prescribe the following transactions. So every person who intend to deposit cash in his one or more bank account with the banking company or cooperative bank or post office, if the cash deposit or aggregate amount of cash deposit in such account during a financial year is 20 lakh or more. So if you want to deposit 20 lakh or more in your bank account, then you have to make an application for PAN and you have to provide your PAN to the bank. So in that case, you have to make an application for PAN at least 7 days before the date on which he intend to deposit cash over a specified limit of 20 lakh. So say for example, you have already deposited 20 lakh in your bank, okay, cash deposit. And now you want to make one more deposit of 2 lakh rupees. So in aggregate, it is 22 lakh. So now, before making deposit of 2 lakh, you have to obtain a PAN if you are not having a PAN. Okay, so you have to make an application for PAN at least 7 days before making the deposit of additional 2 lakh. Same is applicable in case of withdrawal. We have discussed the withdrawal under 194N. You are not filing return, then the withdrawal TDS is applicable if you are withdrawing over and above 20 lakh. Right? So if you want to withdraw from one or more your bank account with the same bank or cooperative society or post office, 20 lakh and more, then say I have already withdrawn a 19 lakh from my bank account. Now I want to make more withdrawal of 3 lakh. So for that 3 lakh withdrawal, I have to mention PAN to the bank, and for that if I have not possessed PAN, then I have to apply for PAN. So I have to apply at least 7 days before the date on which I want to withdraw the amount. Say, for example, I want to withdraw on 5th January. So I have to apply for PAN 7 days before 5th January. Okay. Otherwise, I'm not able to withdraw the amount. A person who intend to open a current account or cash credit account with bank or post office. If you want to open a CC account, that is cash credit or current account, then you should mandatorily have PAN. If you are not having PAN, then you have to apply for PAN before 7 days on the date on which you want to open a bank account. Now same, in these three cases, you have to apply for PAN. So obvious, it is common sense that for this transaction, you have to provide your PAN to the banks, yes or no. So here the amendment is given. We have discussed that 18 transactions, right? In which you are required to provide your PAN. So in that 18 transaction, there is an additional 3 transaction that, say for example, I want to deposit cash more than 20 lakh in a financial year. So I have to obtain PAN. Now, after obtaining PAN, I have to provide that PAN to the bank. Okay. So if your cash deposit in a year aggregate is more than 20 lakh, then you have to provide your PAN to the bank. Same, your withdrawal from bank is more than 20 lakh during the financial year, then you have to provide your PAN to the bank, so that bank will know whether you have filed your return or not. If you have not filed your return, then over and above 20 lakh, they will deduct TDS under 194A. Same, if I want to open an account, I need to make an application for PAN. So after getting PAN, I have to provide that PAN to the bank for opening a current account or cash credit account. Clear, everyone? Everyone clear with the amendment? There are 3 additional points when you need to make an application for PAN, and after obtaining PAN for such transaction, you have to provide your PAN to the bank. Everyone clear with the chapter of provision for filing return of income? Yes or no? Everyone please reply. If yes, then I'll conclude the session. Yes. Yes, late file remains the same. Thank you everyone for patiently hearing me. So I'm concluding the session for provision for filing return of income. Have a happy learning. Have a good day. Mr. Ashok, please end the session.